Renko and backtesting. I get a lot of questions here on the channel about that combination, and in this video I'm going to show you how to get started to create the optimal backtest for your Renko chart trading. Also going to throw in a few offers and hints and tips and other resource for you to maximize your Renko trading potential. So let's get into it. So let's address the first problem with Renko. It's simply because it's based purely on price movement, which is good for structure, filtering noise, visualizing flow, but bad for execution timing, consistency across markets, and back testing accuracy. How do we get around that? Well, what I've done over the last decade or so is introduced time to the Renko charts, and then you have now a real market model that you can get rid of all those negatives that the old Renko world used to have. So like I said, once we've added time, we've got that real market model, and by combining Renko blocks and time, you now can define when signals are valid, remove those repainting arguments. I really hate that word repainting, as you know if you watch my channel, because to me that in itself is an edge that we can use in the world of Renko over the other chart types. We can match real execution cycles, and we can anchor the system to exchange clock rhythm, and that's how professional Renko traders, that's how I build my systems. And to me, to understand this and get it to work, it's just a simple mindset shift. You've got to think of Renko plus time as a smarter candlestick chart. And coming up on the screen, I've got a video that I've done before on that to maybe help you think more in that sort of manner. But candlesticks, time only, Renko price only, put them together and you've got a fabulous system. But it's how we manage that new world, the Renko and time, that's important for like we're looking at today, backtesting. So to me, once you've shifted the old brain cells into this new world of Renko, then I think backtesting becomes much more realistic. The backtests have to replicate brick formation logic, time lock entry points, tick movement inside blocks, slippage and spread, execution delays. Anything less and you're basically fantasy curve fit trading. I get a lot of responses on the YouTube channel saying I've got brilliant looking back test, wins 90% of the time, doesn't look like it's valid. Probably because you haven't built the back test properly. It's probably too good to be true. One of the skills of back testing, it is a job in its own, back testing, a highly skilled job. It's garbage in, garbage out. You've got to pull to pieces the results and be honest with yourself. Have you thought about it? Have you gone through all the steps to create a proper back test? Not, like I said, that fantasy curve fit trading. And please stop this negativity around repainting. It's actually an edge that we've got using Renko when we've added time in there. So use it to our advantage. Make that leap to thinking of Renko plus time as the new, improved, better candlestick chart. Once you've introduced time to Renko, it's a different playing field. And as we're going to have a look now, there's some key variables, some key inputs that are critical to your trading in Renko, and when you want to do these back tests, that are so important to get right. Once you've done that, you've made that, like I said, that mindset leap, you are in the right place, and you should be like I said, not making excuses about repainting. It's a bit of using the logic here, a bit of smart thinking. Yes, prices jump massively when there's a news event or some random event that wasn't expected, but it's exactly the same in candlestick charts. If you're waiting 1 minute or 5 minutes or 45 minutes for a candlestick chart to close, exactly the same for Renko. But like I said, we can be even smarter in the world of Renko and make it even more improved over that candlestick chart. And like I said, we're going to look at that process right now. So I'm going to go through some obvious examples to illustrate the point. Now in front of you, got the pound, its futures contract on the left, a Renko chart on the right, just a candlestick chart, both set to 1 minute. Now we're going to start in the candlestick chart. Note this big move there, 1 minute. It's pretty much moved 7 o'clock, huge amount compared to that part of the day and that part of the day. Now we got triggered on the stochastic there, and obviously we'd have had to wait, if our strategy was to get in on the close right there, and then we'd be in, but actually it's gone nowhere. And if we were just following a simple stochastic crossing rule, then we'd be out somewhere around here, break even, small loss. So going over to the Renko chart set to 1 minute as well, that there is that same bar, but we've introduced time, which makes a huge difference. Again, we got the cross here, but it's exactly the same thing. If you're trading this or back testing this, you're going to have to wait until that's finished, like you would in the candlestick chart. You'd get in here and you'd be getting out there on the same cross rules, and we'd be out in here. Exactly the same outcome as the candlestick chart, because we have introduced time. So a less obvious example now, the S&P 500. We've got on the left, let's just put that to ATR, 45-minute Renko chart, 15 block size there, and on the right hand side we've got 45-minute candlestick chart. We've got the same stochastic indicator. Let's take this obvious example here. We can see that nice turning point there. We got the stochastic telling us to buy. It's equivalent over here. Now the problem, I'm guessing a lot of you are going to be thinking is, well, that price, by the time I've waited, it's gone, I've missed the trade. But actually, if you compare it to the candlestick chart, and because we've introduced time, it gets rid of that differential. So here we'd get in, if we're waiting for the bar close, somewhere around here, which is the equivalent here. So actually in this instance, we're in a bit earlier, and we would get out, using that same stochastic setup here. But on the Renko, if we waited, because it hasn't moved that fast, because if you're day trading, it's more obvious. You get that big intraday move around news events, and you get the spike in the bars, they go off. But it's the same. You wait. If your strategy is wait till the close of that time period, it's exactly the same type of principle when you test it that way. So we're getting a bit later, but actually we're still in that trade, which is much better than that one, like I said, where we got out there. But the problem is waiting. You have to wait for that 45-minute window, and that's not what I use. I use a faster time frame, and I get the right block size. That's the two ingredients that you need to get this work. So let's just play around with that. So we can see the ATR 15 there, but we want that set to minutes, so we get the granularity of the signal. You see, if I drop that to minutes now, it's going to get noisy. See, let's just remove those drawings. You can see we've got to pull it way back to get the same, even further back than that. That's only giving us a small snapshot. You've got to go all the way back to down to there to get the same. Obviously lots of nice little fast signals, but that's not what we want. We might be wanting a longer trade. So what we've got to do is we've got to get the equivalent time zones to the candlestick charts. And in my book I've got a nice comparison table in there that you can check out that gives you sort of a starter guide to how to put the two together, and think in terms of Renko being a new candlestick chart, then because we've introduced time rather than being the old-fashioned Renko stick way. But let's just play with this example. Let's pull that back of it. We're actually going to be using a fixed size. So for example, we've done our homework, we've worked out the right block size, and maybe it is 15. What does that do to the chart? It's probably going to give it a bit more granularity, but you're going to get the signal every minute. So that means this stochastic is going to be a lot more granular. You're going to get the backtest information a lot quicker and faster, the signals as well. And you've got to factor that in when you're producing your strategy as well, what that does to the results. But you're getting in after every minute. It's going away, it's looking at the data, close of the 1 minute, it's going, has it moved enough? No, but because we've spent the time working out the right block size for that strategy, and we've got the faster granularity. Those two put together, make it a powerful, setup. And the other thing you're saying is, well, 1 minute Renko data, I'm going to need a lot of data for that. My charts only go back 6 months. Well, you can get the start of the data. You can get 6 months worth to backtest, but then if you can do a bit of Python coding, or you can store the price data historically, you can build up quite easily a very long period of price data. I've got 5-10 years stored away of 1 minute price data in these markets, so I can backtest very simply. If you want to take it to that next level, that's where you've got to go, or you've got to rely on a good bit of off-the-shelf software allowing you to do that. But it doesn't necessarily have to be 1 minute. It could be 5 minutes, 10 minutes, but you've got to factor those two key variables in. Once you've introduced time, it's getting the right I suppose time frame to trade in that gives you the granularity you want in your backtest, and you've got to accept that you're trading it like a candlestick chart. So it's a bit of a mindset shift as well. And then it's factoring volatility and getting the right block size for your strategy. So just to show you a typical example here, this is one of the backtesting engines I built, and you can see there in the bottom corner, if we look at the WTI example, I've got 9 years of data to play with there. I click on that, brings me into my sort of dashboard of playing around, you could say, constructing different setups. Let's just pick on this one here. You can see the setup. You can start to get the results, number of wins, losing streaks, those type of things, and then also you can get the backtest view chart, P&L, drawdown, that sort of thing, and that's using that approach. Like I said, it's quite straightforward. Once you adopt that mindset shift, you can start playing around. This one's got a much better win ratio, 79%, and you can get the strategies. So like I said, once you got the mindset shift, that's a 1 minute Renko chart. Backtest again. Let's have a look. There it goes, much better, much stronger. But like I said, you can construct these sort of things as you get more skilled. We got courses on Python, for example, for beginners all the way through to the advanced. You want to do this sort of thing in the world of trading. It is a lot easier than what you actually think. You don't need to build this sort of engine. I've got examples on videos on the YouTube channel how you can do a very quick backtest quite simply, but by getting your hands on the right data and then getting some stats. Maybe you haven't got the complete Python skill set maybe to do something like this, but if you've got a starting point where your win-loss ratio, your risk return, your sharp basic numbers over a period, you could go what I call semi-live trading, where you reduce the risk size and you build up data, say over a period of 3 months, live trading on a lot smaller risk and building up a live result portfolio of your strategy, testing it that way. So sort of forward back testing, so to speak. So let's summarize then what we need to do to get back testing working properly in Renko. First step, add in time. That's the critical element here. I only use Renko and time in my trading. Then it's a mindset shift. Think of this Renko and time as a new improved candlestick bar, and then we've got to get the variables, the ingredients right to the setup that we want to backtest. So we've got to pick a Renko time frame, and like I said, I like to use the 1 minute. I mentioned there in 0.5 for granularity. It's a payoff for me between being too quick and too slow. I like the 1 minute. Like I said, for those who like to use the word repainting, does cut down on that element quite a lot. But if you're going to use that, then you have to get the second ingredient right there, which is the block size, and you've got to create that around volatility. I said that combination massively important, and bigger block sizes, you're going to get less trades, so you can slow your strategy down. So you've got to make it strategy relevant as well. If you are day trading, if you're trying to scalp, you've got to get the right block size to not create the false signals, so you can test your strategy. And it'll be exactly the same in the candlestick chart in the backtest world as well. The price moves just as quick when you're using a 3-minute, 5-minute candlestick chart and you're trading quite volatile market. You're going to get those gaps, those movements, those shifts, those news events that are going to skew your backtest possibly. And that's where point 7 right at the bottom there comes in. Backtesting skills. It's often overlooked. You think, oh, I'll just put this through a bit of code and get a set of results and that's my backtest. No, it's not. It's garbage in, garbage out. You've got to be a skilled analyst, a data analyst, and go through the data, cleanse it, optimize it. It depends on the strategy. Like point 6 there says, you've got to create, when we're using this approach, adjusting block size by volatility, you've got to find the pace of the strategy that you're using. There's no point having huge block sizes on a scalping strategy. You never get a signal, or vice versa. But the key to all this, like I said, is that we want to address backtesting, get our backtest right. In my opinion, if you add in time, you give Renko a time frame and the relevant block size by the strategy you want to use, and then you have some backtesting skills, you get the amount of data, some logic, some common sense, some smart thinking, then at the end of the day you're going to produce a pretty decent starting point for your trading strategy. Remember, backtesting is not the be all and end all of it. It's your starting point to give you an idea whether you have that edge in the market that you are looking for. So I hope that gets you started on your Renko backtesting journey. But if you want to learn more, well, you're in the right place. Got loads and loads of resource for you. If it's not on the YouTube channel, we got 750 videos, I think, nearly now on there on the world of trading, and from all sorts of areas, markets, techniques, tips, the whole lot from my 30 years of trading, all in there. You could hit the website www.TheStopHunter.co.uk. Let's have a quick look actually. What have we got? There you go. There's the website. It's going to tell you all about how you could construct your own trading journey. In terms of products, we've got a core trader training program coming soon in the first quarter of next year. We've got the books out, Samurai Trading Code, another new book, Technical Analysis Does Work as well. But we've also got, most importantly for our backtesting example, Python for Trading, where we're going to teach you all about how to do some coding. Doesn't matter your background, right from the start. If you know nothing about Python, we're going to take you through, like say, that journey. Obviously the Renko book. And then we got some new, more advanced learning stuff in the world of coding and programming, machine learning, AI. And I'm also excited about the Renko Bot Build e-learning course as well. So you can build your own bot, where again, we cover off all you need to know about backtesting. And you can see a bit more detail there actually if you go to the Python for Trading page or the Renko Bot page. I said it's all in there, and you can click through and find out more. We also got a masterclass come out in January on how you can turn a small account into a business over the year, and backtesting all part of it. You like the digital products, there's a link in there as well. And actually we got a Black Friday, or call it Black November sale already on the go. I put a mega bundle of Renko stuff together. Apart from all the other products that are on the site there already, if you click into that, you can see what you get, and you do get a lot for your money there. You get the book, you get the Python course, the bot build course, ticket to the masterclass, the calculator for block size, it's all thrown in there for you. So check that out if you want to, like I say, advance your trading somewhat over 2026. Want to take Renko to that next level. And moving on, I hope, like I said, you found the video useful. It's certainly a mindset shift that you've got to adopt to get backtesting to work properly, and then those key ingredients and variables set up, and some smart backtesting analytical work to get like with any backtesting in any market or using any type of chart, to get your backtest at a decent level where you can start to appreciate whether you've got an edge or not. So if you like today's video, please give us a thumbs up. Don't forget to hit the subscribe or notification buttons. Loads more content coming your way as usual. So thanks for joining me. I hope to see you in that next video.